Howdy, partners. It's almost October, and that means it's time for the Crow's Nest and the Wealth Advisory's Top 10 Stocks for October 2025. As you can see, my co-host Jason and I have chosen to come in costume. I'm dressed up as a cowboy, as you can see. Jason is our captain, obviously.
Privateer looting the high seas.
There we go. Searching for profits high and low.
Yo ho, and I'm not just talking to dubs. I'm talking to all you hoes out there.
Happy Halloween, everybody. And honestly, we're extra happy this month because we were tallying up our average gain, and the markets did really well last month. We had the NASDAQ up about 5%. S&P was like 2.5%. Dow was at about 1.5%, all good gains, all of them hitting all-time highs, new all-time highs. That's pretty cool. We had one day where all three major indices hit new all-time highs all at once. I think that was the first time that's ever happened, or the first time it's happened in a really long time. But as well as the markets did, they couldn't even come close to our top 10 average. We averaged a 19.6% gain as of the morning that we're filming this. I'd say that's pretty darn good. We had 8 out of our 10 picks were winners. 7 out of those 8 were double-digit winners. So, I mean, I don't know what I can say to those of you who are watching this who haven't become members of the Crow's Nest and the Wealth Advisory yet, except do you not like money? Because we've really been doing pretty good this year, I gotta say. This month is just another episode of us beating the market. Hopefully that's what this episode is going to be too. So look, I always encourage you guys to join. I think that the 19.6% average gain across the 10 stocks is a really good reason to join us. Not only do you get this list, you'll get monthly issues with new recommendations. You'll get weekly updates on the model portfolio and on trends that we're watching. You'll get access to all of our reports, to our whole model portfolio. You're talking about, combined almost 50 stocks there. Just a lot of bang for your buck, including the full 10, which again averaged a 19.6% gain last month. So please, guys, take a little bit of time out of your schedule. Click the link below the video in the description. Join both of us. We worked out a bundle so that you can get an extra big discount. Honestly, Comcast would be incredibly jealous or proud. I don't think proud, because we've got like way better customer service than them, so they'd probably be jealous. I'm going to go with. But it's a great bundle. You guys should definitely join us. As I say every month, though, if you don't join us, we'll keep putting out the first 4 picks, but that's where we're going to have to cut it off because we've got paying members that pay for the entire list, and we can't give it away for free if we're going to charge them for access. But we'll keep putting out the first 4 picks for as long as you want to watch. Just do us a favor, subscribe to the channel, give us a thumbs up if you like the videos, drop a comment if there's other stuff you want to see us cover, or you've got questions, or you just want to tell us, like, great job. Speaking of comments, we got some great ones. I think I addressed the one of them, which was when do I get the other 10 stocks, and that's when you become a full member of the Wealth Advisory and the Crow's Nest. But the other one, well, we like your vibe too, and we're really glad that you're a subscriber, and we hope you're watching this one, and you know who I'm talking to. All right, so with that, guys, we've got a great month ahead of us. We're bullish on this list. We were really bullish last month. We were probably some of the only people out there that were bullish. Everybody was out there telling you, like, September's the worst month for stocks. And I did mention that historically it is the worst month for stocks, but that there were a lot of reasons that might not be true this September. And it turns out I was right. So, I've been doing this for a while. It's not a fluke. Jason has too. These market-beating gains are kind of becoming regular. I hope I don't jinx us by saying that.
Yeah, really.
Everything pulls back. But yeah, we've been doing it for a while, and we love doing it. We were just chatting about it. We painted quite a funny picture. Privateer and cowboy sitting here chatting about finance and international relations and whatnot, I'm sure. And you guys will get a taste of that as we get into the top 10. So with that, let's go ahead and get to my first pick, and we'll let you guys get back to your month and go shopping for Halloween candy. My first pick is MP Materials. I forgot to grab my pen. Ticker symbol, I can underline it. It's MP. I'll put it up here just in case I'm blocking it with my hat. MP Materials is Basically, the U.S. was the U.S. only rare earths processing facility. We now have another one. We now have some more. But MP Materials, we got into this stock really early on because, I see the need for these rare earths. We've really become dependent on China for our critical minerals. And, China's not necessarily, I hate to say an enemy, but we'll call it adversary. They have an adversarial stance to the United States, and it's not good if your military relies on a country that has an adversarial view of you. So we really need to decouple from them, and MP Materials is sort of helping lead the way with that. It's actually the laggard of our capital appreciation portfolio. I love pointing this out. It was only up 10% last month. Only doubled the Nasdaq. Only almost 5 times the S&P 500. But honestly, the other stocks just really, really outperformed in that portfolio. But that's part of the reason that I really like it, and I think it makes a good buy coming into October. Individual stocks just are not grinding up in this market. They're shooting up because of headlines. They're reacting to events, and MP is a great example because right after we bought it, the Pentagon gave it a huge contract and became its biggest shareholder. We were talking about that before the show. We think it's kind of weird, the government buying or owning shares in companies, but we can't argue with the gains that it's given our stocks when they do it to our stocks. So anyway, the stock shot up. Then the U.S. and China renewed their kind of beef about critical minerals, and the stock went up again. And it's been sort of moving sideways since then. You might call it consolidating, but it's got a really solid floor underneath of it. People are obviously accumulating this stock as it dips down. And, just literally any other catalyst is going to send it up another step higher. And, these steps have been, I want to say it ramped 50% when the Pentagon announced the partnership and the investment. It shot up another 10 or 15% when the U.S. and China started fighting about critical minerals again, and China started threatening to shut them off. So these are big jumps up, and while that catalyst might not come this month, it's going to come, and I really want everybody to be invested in this one before it happens this time around. So anybody that missed, the first jump when the Pentagon invested, people that missed when the U.S. and China started fighting over critical minerals again, there's going to be another headline. There's going to be another jump. I want everybody to be in this one. This is a long-term play here. This is going to take a while for us to decouple from China. And this isn't a Trump administration thing, and it's not just a Republican thing. This is a bipartisan thing. D.C. agrees that we've become dependent on, countries that we can't really rely on, and that we need to get away from that. So this is a long-term thing, and it's got long-term support. I want everybody to be involved. So MP Materials for my first pick this month.
Nice.
Let's pass this over to Jason. He's got another good pick this month, and it's another one that this is a good one. I like this.
You like this one? It's Wells Fargo.
I like this one.
WFC. Wells Fargo. We all know the name. This is one I first recommended actually a few months ago, I think back in July or August. It struggled to get off the ground a little bit. One reason for that was because they lowered their guidance for net interest income. But we've moved past that, and the stock has really started to find its footing over the past month. It's now up 5%. It's up from where we recommended it. It's doing a lot better. And what you're going to see is that momentum is probably going to carry forward for the foreseeable future. Because, again, what we talked about with Wells Fargo previously and what we're going to talk about now is a company that's coming back from strict government penalties that restricted its size and its operations. And now it's back to building out its wealth advisory business, its wealth management business, and it's able to take on more deposits. I think another good tailwind here to look at would be that if inflation persists and things continue to get more expensive, which we believe it will, and I think we're going to touch on that later, I think you're going to see people putting more stuff on their credit cards, and I think credit cards could start to be another thing, another catalyst for revenue. Obviously not just for Wells Fargo, banks and financials across the board. I like it in terms of, as soon as the Trump administration got in, they started cutting regulations for financial institutions. It's very pro-business in that respect. So I think there's a lot working at it. It's not affected by tariffs so much. These kinds of things, the financial sector kind of is apart from all of that. And so I think over the next few years even, it's going to be really well situated for these gains to pick up. And Wells Fargo, again, being restricted the way it was, is now really ready to break out. And as it builds its business, you're going to see that revenue climb and ultimately the profit climb. And you're also going to see it go back to investors. Also worth noting here with Wells Fargo, they just bought in the current quarter, or they've $5.5 billion worth of stock repurchases. So they're clearly not concerned about their capital. They have plenty of money. They're buying stock back. I think you're going to see a lot of earnings per share go up, along with revenue, as Wells Fargo gets its feet back under it. There's still time to get in on this one. Like I said, it kind of dipped these past few months, but it's been a lot stronger. So I like Wells Fargo here.
I'm really glad you mentioned the buyback program there, because something that I definitely like about Wells Fargo is coming out of these restrictions being lifted. There's a good possibility. You know how much we love dividends.
Yeah, dividends
Can
share
grow
buybacks.
a lot faster. Can be a lot bigger. Share buyback programs can be bigger. They can start returning capital to investors again, and sort of thanking them for sticking with them over the rough run, or in our case, just giving us money for paying attention,
or even rewarding themselves. I mean, the
That
executives
too.
hold these shares, so
They are
when they
definitely
buy
heavily
these shares back or they increase the dividends, a lot of times they're increasing their own compensation.
They are definitely paying
and
themselves
so
some, too.
but again, financial services, a sector that has that free capital to do that, and I don't think they're really in any danger of seeing that go away, because like I said, they are not beholden to retail, and if anything, higher prices and even lower employment are going to have people taking out more loans, especially with lower interest rates. I think you're going to see loan volume go up. So I think things look good for financials in Wells Fargo.
Yep, I like it. All right. Coming up, my next pick here. Jason sort of touched on one of the reasons that it's coming in here when he mentioned inflation, and it is Barrick Mining Corporation. Now, this used to be Barrick Gold, and its ticker symbol used to be GOLD, but it's not anymore. It's just B, because they want everybody to know that they are more than just a one-trick pony. They're not just a gold company. They also explore for and produce copper. So I did a little bit of research. They are responsible for about 1% of the annual global copper haul, which is not very much, especially when you consider that they're responsible for almost 4% of the annual global total gold haul. So it's small, but they really just started in mining terms. They just started back in 2011 when they acquired Equinox Minerals. That's really when copper became a second priority to them, in addition to gold. And it's smart because there's a supply deficit coming in copper, and there's not many companies out there exploring for it or growing production of it. Copper is already in an upward trajectory. When we hit a supply deficit, we're definitely going to start seeing wild moves in that metal. And with gold and silver already sort of flashing this commodity rally, inflation favors commodities. A weaker dollar, which is caused by inflation, which is caused by lower interest rates, also favor commodities. Copper is a commodity. We've already got lots of exposure to gold and silver. We'll talk more about that later too. But copper is another one. And commodities, honestly, hard assets are really looking like they're coming up in a cycle, and we've sort of got a battle of growth versus value here, where a growth cycle is sort of coming to an end and a value cycle is coming up. We've got global economies in basically like pre-war mode here, where they're building up their militaries and they're building up their arsenals and they're stockpiling critical supplies. Copper is a critical supply. It is essential also to the energy transition, which a lot of people would tell you is at least slowed down. In 2024, the world spent $1 trillion on the energy transition. So far in 2025, we've spent $2 trillion. It's not slowing down. It's not stopping. The world is definitely expanding its energy options. Like we said a long time ago, it's going to be kaleidoscopic. We're going to need all of the energy we can to support the global growth that we're expecting and that we want. Copper is going to play a huge role in that. Copper prices actually shot up today, the day that we're filming, because Freeport-McMoRan, another big copper producer, is facing shutdowns at its Strasbourg mine, which is one of its biggest copper mines. So you're going to see wild moves in the price of copper. And Barrick is going to sort of track those. It's going to follow gold more, obviously, because that's a bigger part of it. But I like both the gold and the copper. I like commodities, and I think everybody needs to be invested. And I think Barrick is a really good place to be there. And it was up a good 30% last month. So I think it's safe to say that we can get we've got the momentum behind us for October here. We can definitely get another market beating gain out of this one. All right, coming back to Jason.
And yeah, we're going to stay right on theme here with that one.
Yeah, like I said, we're going to talk more about gold and silver shortly.
Yeah, because now we have silver. Oh, give me the. There we go.
Well, there.
There we go. This is PAA. This is Pan American Silver, because we talked a little bit about gold. We talk about silver. A lot of times when I'm outside of this job, I don't like to talk about investing because my biggest fear is giving a stock pick or any kind of investment advice to a family or friend and having it go down. That's a big phobia of mine. But the one thing I've been telling them these past few months is whether it's crypto, commodities, or stocks, put your money in something, because the dollar's on its way down and that's not going to change anytime soon. We know inflation has been sticky ever since the pandemic, right? It spiked, it moderated a little bit, now it's kind of edging back up, and the Fed's lowering rates. That's not going to help the dollar. Okay, there's a lot of things that aren't helping the dollar right now. So you kind of look at it, and even with the Fed policy, they just cut the rate by a quarter point. That's Donald Trump wants 10 times that cut. He's out there, asking. He wants the interest rates below 2%. Okay, and if he continues to push for that, and he continues to kind of take the action he's got in terms of leaning on the Federal Reserve and America's monetary policy, and he continues to push it in that direction, then the dollar's going to get weaker and inflation's going to continue to rise. And it's either going to be gradual or it's going to spike, depending on whether or not Trump gets his way with the Fed. But either way, you're going to want to be in metals, especially with just generally, especially we're talking about growth stocks, valuations being frothy as they are in a lot of cases, that money's going to pour in. You want that, again, you want money in all those things, but make sure you have the exposure to the precious metals. There's a reason these things are running up. And especially with silver, we've seen gold hit record highs as a matter of routine. You don't hear as much about silver because silver's record high was actually an astronomical one. It was $48.70 an ounce, and that was set back in 1980. And we are set to break that record. I would be absolutely positively shocked if silver doesn't break that record at some point in the next few months or next year or so. We're going to get there. It's going to happen. And when people start to see that, and when we can start talking about silver prices in terms of setting their own new record and breaking of, again, a long-standing 45-year-old streak, which really shows you how astronomical that price was back in 1980 of $48. But silver's going to gain even more and more traction. So gold, silver, if you're worried about inflation, if you're worried about prices, if you kind of look at that and you see those macro forces pushing it in that direction like we do, then these are stocks, Barrick and Pan American. If you want to get in metals, it's what you're going to want to look at.
And before we move on from Pan American, I just want to say that 1980 silver price there, as silver was making its way up there was this little company called Lion Mines, and between 1976, halfway through 1976, you could buy that stock for 7 cents a share. Was it 7 cents or 77 cents a share? By 1980, it had run up to $380. That's a 54,000% gain in 4.5 years. That's what precious metals rallies can do to precious metals producers, right? The metals aren't going to move that much, but the miners can. And this is a great miner to be in. Barrick, another great miner to be in. So with that, let's recap our first 4 picks, and then we're going to cut this off for those of you watching on YouTube before we continue with the final 6. The final countdown, as it were. All right, here we go. Coming up at number 10, MP Materials. Look, critical minerals, decoupling from China. This is a long-term play, and these stocks are moving on events. They're moving on headlines. The next headline is only a matter of time. It might not happen this month. It might not happen next month, but it's going to happen, and the stock's going to shoot up because of it. Once we get back to a more normal market, it'll probably just start grinding upwards. There's a good possibility that they start paying a dividend in the near future, too. It's just a great company. I want everybody to own it for the long run. So it's my first pick this month.
Yeah. Financials, one of the sectors that have a lot of wind at their back. They've got a lot going for them in terms of just regulation and business and interest rates, money supply, all of it. They're going to be one of these sectors that continues to benefit from this stuff. They're going to be one of the safer sectors if you're worried about a step back for the market, which I think is reasonable. If the market took a breather tomorrow, I would not be amazed. I wouldn't be amazed if we saw some declines. But it's going to come back up, and financials are going to stay put and then lead that subsequent rally for sure if that happens.
Yeah, we're definitely in the place where we're still buying the dips.
Yeah, 100%.
Coming up next, we've got Barrick Mining Corporation, because we are buying the dips, but we also know that inflation is sticky. It's going to be coming around. We think that there's going to be a pretty hard rotation into hard assets, commodities, things like gold, silver, copper, even energy, real estate. But gold, silver, copper, definitely. And next up, sticking with precious metals.
Right, and the other thing about precious metals too, I should have made a note of it, but ETF demand, that's been surging as well. And when you get that demand from ETF, and what you're going to see as these prices continue to rise, or if inflation gets worse or remains persistent, more and more people are going to want to push into those ETFs, silver ETFs, gold ETFs. They're going to want to get exposure, and that's going to subsequently drag miners higher and shoot miners higher. And so you're going to go right to the source with these kinds of companies.
Definitely. And as one of the bigger ones, Pan American is going to make up a pretty big allocation in a lot of those silver miner ETFs. So, it's going to get pulled along for the ride even more than most. So there you go, folks. I think we've got a really good list for you. We'll see if this half of the list, or this part of the list, can do as well as this part of the list did last month. We had a pretty wild month. It was really impressive. I don't say that we're always going to hit a 19% average gain, but we always try to, and hopefully we do this month. And like I said, guys, you definitely should join us. Not just for the laughs that you'll get from watching the full video of the cowboy and the pirate talking stocks, but I mean, just last month's list alone could have paid for literally a lifetime membership to both the Wealth Advisory and the Crow's Nest. And I don't understand why people don't want to be full subscribers. We've got tons, actually. People do want to be. Collectively, there's probably over 30,000 people that are members of our two communities, so there's a lot of folks that are profiting from this, but we want as many more to profit as possible. Yeah. So, do yourself a favor, click that link below the video in the description, get the bundle, get both the Crow's Nest and the Wealth Advisory at a discount. We'll never auto bill you, we'll never auto renew you. You only stick around if you want to stick around, okay? But I promise you're going to want to stick around, 19.6% average gain, guys. That's all I've got for you. Thanks, as always, for watching. Subscribe to the channel, thumbs up to the videos, drop us comments, and have a great month. Happy Halloween.